Okay, so this video is a preparation video for tomorrow option trading, and I just realized that tomorrow is still the month of August, but I am going to put it under September because I want a new month. So depending on how well I do this month, I might move this results back to August. But I want to start a new month. And I'm gonna estimate tomorrow if I trend correctly based on the forward-looking expectation. So this is a projection video on what I'm expecting for tomorrow. And if it goes as expected, I will label it under the trend because I will be going the direction that the market is going, and my prediction or my projection is $5,000. So what am I expecting for tomorrow? So here is the Nasdaq, and this is the Fibonacci. So if you line up this Fibonacci, I was showing. Let's look at year to date. This right here is 11,800. This top of the Fibonacci is 11,800, which lines up for the 38.2 retracement right at the peak of February before the downturn. And if you look at it, everywhere along this line, it's a significant level. So, I mean, it looks like it's a significant level alignment. So there has to be a reaction at 11,800. There just got to be. I mean, otherwise, if this week just runs up without any reaction at 11,800, it would invalidate this Fibonacci, which would be very surprising to me. But hey, anything can happen because this whole market is manipulated anyway. But let's just go with the most obvious. You gotta stick with the most obvious and react accordingly. So the most obvious is a reaction at 11,800, a intermediate top, so that the technical would line up where such Fibonacci is peak at 11,800. First retracement is at this level. Second retracement, which is at this level, which lines up. And even the 61.8 lines up pretty well. Okay. So I drill this out, and this is the expectation for Monday would be a green candle and a continued push toward 11,800. And then on Tuesday, you would have a doji top where the wick of the candle penetrates 11,800, but it's gonna fail and retract back to be a red candle. So the MACD oscillator would look something like this: a green candle on Monday, and then a red candle. So it looks something similar to this guy. Okay, this is what I am. Well, it looks something like this on the MACD, but not on the candle. The candles will look something. It would be like this. So that's my expectation. So if Monday is a green candle and I'm trending with that, then my best bet is to play the positive on Amazon. So for Amazon, this is what I'm expecting to play. Okay, so Amazon, if I am lucky, would be a green candle, and it's gonna be above 34.50 on the close. Above 34.50 on the close, hopefully. So the intraday, um, best guess for tomorrow play would be, let's just take a guess. This is the 5-minute candle. Okay. So the best guess would be a gap up. Let's choose another candle. Let's just use the green candle. Okay. So best guess would be a gap up. Okay. And you don't want to sell the puts um, right away because even though there may be a run up, you are wary of a smackdown. And just because it can happen. You don't know if it will happen, but just because it can happen. So I'm looking for some type of signature where I'm looking for a retracement, whether this goes up and then go down, or if I'm lucky, it'll wiggle around and then smack down. This is the best case scenario. Best case scenario is something like this, where it's this low is here, this is here, and this lines up. So at this point, I will sell two puts. Okay, two puts, and I'm hoping the smackdown will not be a legitimate smackdown. It'll be more of a weak smackdown, kind of like it'll be a fast sell-off, so to speak. The volume would be still light, nothing heavy. You'll actually see doing, if you were to look at it real time, you see if it's a strong smackdown. A strong smackdown would do something like this, and then bam, really big and violent. A weak smackdown or fast sell-off would be, it'll do something like this and like that. It's not really strong. It's just, yeah, there's some sellers. They're trying to get more sellers to come in, but they're not. The sellers are not buying it. They're not coming in, so it's not really a. It's just looks weak. The sell off looks weak, and so I would be selling two puts, one to keep long term, and the other to cover when there's a rally. So if it rallies back, let's just say you smack down, the next can it'll start to go back up. At some point, it'll hit a technical level, and let's just say you got this. This is a 5-minute candle. So let's use the first support line being somewhere like right here. Like this guy will go like that. And so the first customize, let's go back to green. So something like here, and then a retracement maybe, hopefully. Doesn't matter if it penetrates it or not. You can, I mean, you don't need to be perfect on how to get out. You just want to sell off at some point to get, let's just target, anywhere from 1 to 2,000. So at that point, I would get one, let's just say 1.5K. It may be more depending on what the value of the puts I decide at the time, but that will be my first profit, hopefully. And I don't think they will engineer another SmackDown, so at least I'm not playing for it. If there is another SmackDown, obviously I'm gonna get out of the second puts, and I would have to massage it and take, if it get close to even, or just like $50 profit, I'm gonna get out. There's no way I'm gonna hold on to a put that potentially can sell off even more, even if it's a false signal. So even if it's a false, another false sell off, why want to hold? Why would you want to hold off? Like if it's another false sell off coming here, why would you want to hold on to the puts? Just get out. And even if it retraces back right away, there should be more entry point. So there's always opportunity to get back in on the puts. I will not, depending on how this look, I may or may not sell the calls, because I don't want to trap. I don't want to be scalping when I am predicting a trend up. So I probably won't sell the cars, but I may change my mind. It depends on how I feel at the time. Then let's just hope either scenario, whether it's a secondary, try attempt of a fail flag, or it just hold flat and continue up. You just gotta wait, and any wiggle where you see something like that, or if it comes up, comes down. Anytime you see one of these guys, let me change to a blue pen. Anytime you see one of these guys, something where it looks like a reversal, right? You want to sell puts. And if you're selling puts, if you get lucky and there's a push, and a push for Amazon would probably be after 11 a.m. because in the morning there's just too much volatility, too many hands being traded, too many players in the game. It's hard to push it in the morning. The only time you push it in the morning is you have a big gap up, and then the first candle would be a big candle, and it normally will follow news, like an upgrade, a major upgrade where some institution says, oh, you know, new price target is 4,000 for Amazon. Then it gaps up and it probably just shoots right off the bat. If that happens, then you just, I don't know. You can sell the puts at the beginning if you choose to, or you can just wait for something, or you go to another player like Tesla, Amazon. You don't want to force your trade, because anytime you force a trade, you're just guessing. So you don't want to guess. You want to play the technical, and you want to play it clean. So if the setups isn't there, it's better just to abandon it and go for something else. I mean, there's always Amazon, there's always Tesla, there's always Apple, there's always Google, there's always other players you can get in. So don't force it. Um, and you just wait. It doesn't matter if this continues to go up here or here. You know, of course, if you at this point you can say, "Oh, I missed all of this," but yeah, you never know what happens, right? Um, so you want to wait for some type of retracement, and then you can get in, and then ride it up if you're lucky. If they continue to just push it off the bat, you just miss it. At least that's my philosophy. I just don't like to chase this push. Even though this is how you make the most money for traders, this is how you make the most money, is they just ride the push. But hopefully the scenario doesn't happen, because these are hard for me to play. A more legitimate scenario is the one I just laid out, where I'm gonna wait for a retracement. If there's not a smackdown, that's fine, or a fast sell-off, that's fine. I mean, even if there's not, you still have a signal, right? You still have some sort of signal at close to opening where it's gonna run back up. I mean, close to the flat line where it's gonna run back up. And that's where you either sell one puts or two puts. Now, I probably won't sell two puts on this case. The only time I'm going to sell two puts is on a fast smackdown. If it's a real smackdown, yeah, if it's a real smackdown, then I probably won't sell two puts as well. I'll probably sell one put, just hoping for a recovery. It has to be a fast sell-off where I'm seeing weak volume, weak behavior on the sell-off. Then I would sell two puts, one to hold for tomorrow, one to get the first morning profit, and then I'll get in another put at any other point. So that is my play for Amazon, and hopefully if I trend correctly, I want to start the new month, even though it is August. I'm gonna consider this the new month. I want to start the new month favorably and continue to trend, because in August, I wasn't really trending at all. I mean, I was counter trending, and a few times I did trend. It wasn't even good performance on my trend. And the first day on August was already a red day, and I was counter trending. And I look back on this day and just completely stupid playing. I mean, I don't know what I was doing, but yeah, I was playing for. It was a clear downturn on Amazon at this point, and I was playing the puts for some reason. But yeah, hopefully it's not a downturn. So If it's a downturn tomorrow and I'm playing the puts, I'll probably end up losing just like this guy, another 1,000, 2,000, because I mean, what I'm seeing is a continued push. So I'm playing for a upside. Um, if it runs the opposite direction, then I would end up, this would be considered a counter trend. So, and then I may or may not make any money. I may make, if I'm lucky, I make 500. But hopefully that's not the case. Hopefully I'm trending tomorrow and I'll make at least 5,000.